Massachusetts real estate hasn't cooled. It's recalibrated by the numbers, by the town line, and by what sells when it's priced just right. Statewide, the fall pulse came through clearly. In October 2025, closed single-family home sales climbed 5.6% year-over-year, with 3,921 houses changing hands across Massachusetts. The median single-family price reached $660,000, up 2.3% from the prior October. Condominiums moved differently. Closed sales slipped 1.1% that month, while the median condo price rose 2.8% to $549,900. It was a season of momentum, but the levers of that momentum looked different depending on what you were trying to buy. Trace the run-up through September and August, and a story of constraint and adjustment comes into focus. In September 2020-5, closed sales increased 4.8% for single-family homes and 6.4% for condos. Prices held firm. The median single-family sale reached $654,500, up 4.7% year-over-year, while the median condo sale stood at $525,000, up 1%. Best artistics inventory told the underlying truth. Single-family supply shrank 4.2% year-over-year that month, even as condo inventory grew 5.1% compared to September 2024. New listings were the bright spot. Single-family sellers brought 7.5% more homes to market than the year before, and condo sellers raised new listings 13.3%. When more homes appeared, buyers reacted. In August 2022-5, the numbers were still pushing through summer's weight. Single-family median price rose 4.6% year-over-year to $680,000. Yet new single-family listings grew only 1.3%, and inventory declined 3.3%, tightening the screws for anyone chasing a house before school started. Condos went the other way. The median condo price fell 3.1% year-over-year to $540,000. New condo listings rose 2.9%, and condo inventory ticked up 0.9%. Closed sales pulled back for both property types in August, down 4.6% for single-family, down 0.5% for condos before September's rebound. Across 3 consecutive months, the pattern was consistent. Pricing that met the moment moved, pricing that overshot sat. Goldilocks pricing balanced, not too high and not too low, became less cliché and more operating system. When inventory is scarce, a listing at the right number triggers showings, second looks, and offers. The September surge in new listings of 7.5% for single-family and 13.3% for condos aligned with that idea. More sellers stepped forward, more deals got done. Signals suggest the state's ongoing housing shortage, telegraphed by that 4.2% year-over-year dip in single-family inventory, kept pressure on buyers even as the calendar turned to fall. Behind the aggregate, town after town mapped the texture of this market. In the 12 months ending September 2020-16-5, the communities with the fastest-growing home values ranged from coastal enclaves to Berkshire's hamlets. Norwell led the pack, a typical home value of $1,277,653 and a one-year jump of $53,660, up 5.5%. Egremont stood out in the West, posting a typical value of $805,000 and a one-year gain of $51,686, up 6.9%. In the inner ring of Greater Boston, Weston's typical home value reached $2,220,602, with a one-year change of $48,044, up 2.2%, while Wellesley hit $1,969,343 with a $42,206 increase, up 2.2%. Those are headline numbers, but 5-year arcs were just as revealing. Weston up $836 over 5 years, a $50.09 rise. Wellesley up $640,686, a 48.2% surge. Move across Route 128 and the story remains expensive but diverse. Newton's typical home value stood at $1,499,949, up $34,506 over the year, a 2.4% rise, and $417,534 over 5 years, a 38.6% lift. Lexington reached $1,561,212, rising $26,790 in 12 months, up 1.7%, and $485 up $894 in 5 years, up 45.2%. Needham sat at $1,513,544 with a $22,323 one-year increase, up 1.5%, and a $486,630 five-year gain, up 47.4%. Dover pushed higher at $1,746,599, adding $35,329 year-over-year, up 2.1%, and $554,678 over 5 years, up 46.5%. Lincoln at $1,518,768 posted a $36,647 one-year climb, up 2.5%, and a $515,630 five-year kick, up 51.4%. Taken together, these numbers sketch a top-tier corridor where scarcity has priced permanence into the landscape. North Shore towns also carved out definitive share gains. Manchester registered a typical value of $1,282, with a $46,657 year-over-year rise, up 3.8%, and a 5-year increase of $473,998, up 58.1%. Wenham reached over $40,000 with a $46,683 jump in 12 months, up 4.7%, and a $383,000 $462 rise over 5 years, up 58.4%. Boxford crossed into seven figures at $947,997, up $33,762 year-over-year, up 3.3%, and $346,856 over 5 years, up 49.5%. Gloucester's $759,274 typical value rose $30,224 in the year, up 4.1%, and $263,332 across 5, up 53.1%. Marblehead came in at $1,024,768, with a $19.2 or 1.9% one-year rise, and $305,605 over 5, up 42.5%. Essex's $899,407 value climbed $24,711 year-over-year, up 2.8%, and $302,208 over 5, up 50.6%. On the northern edges bordering New Hampshire, Newbury posted $925,253, up $22,306 or 2.5% in the year, and $332,665 or 56.1% in 5. Rowley landed at $787,000. $40, up $18,492 or 2.4% year-over-year, and $249,194 or 46.3% over 5 years. South Shore demand kept pulling higher. Situate's typical home value was $976,398, up $20,586 in the year, up 2.2%, and $337,741 over 5 years, up 52.9%. Duxbury hit $1,078,765, adding $24,087 year-over-year, up 2.3%, and $410,180 across 5, up 61.4%. Marshfield stood at $774,194, up $19,792 in a year, up 2.6%, and $270,096 in 5, up 53.6%. Pembroke's $648,314 ticked up by $17,750 in 12 months, up 2.8%, and by $198,723 in 5 years, up 44.2%. West Bridgewater's $585,266 rose $19,315 year over year, up 3.4%, and $173,334 over 5 years, up 42.1%. And Norwell's $53,660 one-year surge still marked the standout acceleration on the South Shore map. Swing west, and the narrative flips from seven-figure uniformity to rapid percentage gains from lower starting points. In Berkshire County, Adams posted a typical value of $263,580, rising $20,736 year over year, up 8.5%, and $105,680 over 5 years, up 66.9%. Egremont's $805,000 value came with a 6.9% one-year rise and a 73.6% 5-year climb, the steepest 5-year leap in the Sept. Stockbridge at $738, $102 rose $26,652 in the year, up 3.7%, and $283,842 over 5, up 62.5%. West Stockbridge reached $670,106, adding $20,213 in 12 months, up 3.1%, and $278,653 in 5 years, up 71.2%. Monterey hit $729,616, climbing $28,985 year over year, up 4.1%, and $248,486 across 5, up 51.6%. Mount Washington, with $621,035, notched $30,308 in one-year gains, up 5.1%, and $204,941 over 5 years, up 49.3%. Tyringham at $694,254 rose $21,923 year over year, up 3.3%, and $216,797 over 5, up 45.4%. The Western pattern is consistent: smaller places, faster percentage change, deep 5-year appreciation. In the Pioneer Valley and along the Connecticut River, towns pushed forward with steady steps. Longmeadow's typical value of $522,062 rose $20,563 in a year, up 4.1%, and $159,919 across 5, up 44.2%. East Hampton, at $422,674, added $18,765 in 12 months, up 4.6%, and $128,882 over 5, up 43.9%. These are not outliers. They are part of a statewide rhythm of gains, wide enough to include pillars like Lexington and narrower market towns like Tyringham. Worcester County's edges told their own story of spillover demand. Grafton's $600,841 typical value rose by $17,485 in the year, up 3.0%, and by $197,506 across 5, up 49.0%. Sutton reached $627,201, adding $17,573 in 12 months, up 2.9%, and $215,617 in 5 years, up 52.4%. Berlin pushed to $655,085, rising $21,575 year over year, up 3.4%, and $198,666 across 5, up 43.5%. These numbers trace a corridor of commuters and telecommuters who have bid up prices step by steady step. Merrimack Valley continued its climb. Lawrence's typical value of $500,300 rose $17,738 year over year, up 3.7%, and $178,378 over 5, up 55.4%. Methuen hits $609,720, up 23.48 or 3.5% in the year, and $197,928 or 48.1% in 5. Andover at $980,274 added $22,976 across 12 months, up 2.4%, and $326,789 across 5 years, up 50.0%. Together, they form a belt where price growth is firm and broad-based. Some of the most familiar Greater Boston names kept drawing lines upward. Westwood reached a typical value of $1,211,197, rising $23,479 year over year, up 2.0%, and $400,772 over 5 years, up 49.5%. Winchester reached $1,514,768 with a $19,899 a one-year climb, up 1.3%, and a $430,905-year increase, up $30.19%. Concord stood at $1,439,337, up $34,801 in the year, up 2.5%, and $510,696 in 5 years, up 55.0%. Sherborne posted $1,209,864, rising $35,985 in 12 months, up 3.1%, and $391,299 in 5 years, up 47.8%. Lincoln and Dover continued that arc, holding the line of scarcity that keeps offers aggressive when the pricing is right. Even the highest-priced islands moved, if more gently. Chilmark's typical home value stood at $2,322, $2,845, with a one-year increase of $17,690, up 0.8%, and a 5-year rise of $3,780, up 51.9%. The dollar gains are large, but the percentage gains slowed in the last year, a reminder that even at the top, momentum oscillates. Zoom out to a national reference point, and it sharpens the Massachusetts silhouette. In September 2017, the typical home value in the United States was $360.08 and $90, exactly flat 0.0% higher than the year before. Even as mortgage rates slowed growth nationally and produced declines in some markets, Massachusetts combined modest statewide expansion with brisk increases in particular towns. That mix muted at the top level, kinetic in the details, matched the statewide September snapshot of more listings and a durable housing shortage. On the ground, this translated into a simple reality. In August, closed sales dipped for both single-family homes and condos, down 4.6% and 0.5%, respectively, but the next month saw closed sales jump 4.8% for single-family and 6.4% for condos. By October, single-family closings were up 5.6% year-over-year, totaling 3,921 statewide. Prices followed suit, not spectacularly, but persistently. The August median single-family price of $680,000, the September figure of $654,500, and the October figure of $660,000 reflect month-to-month variance within an upward year-over-year trend. Condo medians moved from $540,000 in August to $525,000 in September to $549,000 in October, a sequence that illustrates how condos can trade in a tighter band even as individual towns notch standout gains. Add the inventory numbers, single-family supply down 3.3% in August and down 4.2% in September, condo inventory up 0.9% in August and up 5.1% in September, and you get the shape of pressure that often shows up at the negotiation table. That pressure looked like multiple offer situations, even as some properties stayed active longer, a paradox that made preparation matter. When new single-family listings were only up 1.3% year-over-year in August, buyers chasing houses felt the squeeze. when new listings improved to 7.5% for single-family and 13.3% for condos. In September, buyers felt openings. Signals suggest that the listing growth into early fall helped unlock transactions and channel demand that had been waiting out the summer. Sellers who matched their list price to the market, neither chasing last spring's peaks nor underpricing to test the waters, saw strong buyer interest. This is where the choices of professionals and small firms intersect with the big numbers. In Westwood, a veteran agent with more than 30 years in the field built a career defined by precision in pricing and marketing, leading her office in both sales and listings over the past 25 years and closing over $1 billion in transactions. In Cambridge and across Middlesex County, a team with more than 14 years in the business served over 1,500 buyers, sellers, and tenants, sometimes literally shoveling a driveway on Christmas Eve to keep a showing on track. In Concord, a firm focused on accessory dwelling units completed the only subdivision in the town's history developed by a woman-owned company, a quiet example of how design and permitting can add homes where the land and rules allow. Luxury ADUs, purpose-built spaces delivered as turnkey projects, have become part of the supply story in Metro West Boston, not in raw unit counts here, but as a path to multi-generational living and incremental inventory. When a map lights up the way Massachusetts did in the 12 months ending September 2027, the 5-year lens confirms the through line. Egremont up 73.6% in 5 years. West Stockbridge up 72%. Adams up 66.9%. Duxbury up 60 to 1.4%. Weston up 50 to 9.9%. Wenham up 58.4%. Manchester up 58.1%. Concord up 55.0%. Newbury up 56.1%. Lawrence up 55.4%. Even the more moderate corridors hold sizable 5-year gains. Winchester up 30 to 9.8%. Newton up 30 to 8.6%. That persistence across counties and price bands suggests that demand remained broader than any single suburb or work-from-home pocket. September's divergence between single-family and condo inventory adds texture to the choices ahead. With single-family inventory down 4.2% year-over-year in September and condo inventory up 5.1% versus September 2024, the statewide picture breaks into two paths. Families looking for more space felt the pinch in single-family options, even as some condo buyers saw a few more listings in their feeds. In August, the median condo prices 3.1% year-over-year decline to $540,000 contrasted with single families 4.6% year-over-year rise to $680,000. Then September and October saw condo medians at $525,000 and $549,900, both above prior year levels. Signals suggest that the condo segment is negotiating its own balance-less scarcity than single-family in late summer, but buyers stepping in where pricing found that Goldilocks zone. Consider a lower-priced outpost like Adams at $263,580 and an upper-tier town like Weston at $220,602.02. Both climbed in the past year, Adams by 8.5%, Weston by 2.2%. But the absolute monthly mortgage numbers for buyers are worlds apart. Yet both markets were caught in the same statewide dynamics. In September, more new listings. In October, more single-family closings. In August, a dip in closed sales as summer lag met inventory constraint. In each place, pricing strategy mattered as much as marketing, because buyers had seen enough to know when a number was right. In Worcester County, a $600,841 typical value in Grafton and a $627,201 figure in Sutton didn't stop momentum. Their one-year gains of 3.0% and 2.9% respectively, and their 5-year increases of 49.0% and 52.4% underscored how a mid-market town can ride a regional wave. In Essex County, a $140,132 typical value in Wenham with a 4.7% one-year rise, and a $1,280,884 value in Manchester with a 3.8% one-year rise reflected how coastal appeal, school districts, and commuting patterns still command premiums. In Middlesex County, a cluster of towns, Lexington at $1,561,212, Lincoln at $1,518,768, Westwood at $1,211,197, Boxford at $1,047,997 moved in a band where homes draw offers if they're priced methodically and presented cleanly. The South Shore's trio of Scituate, Marshfield, and Duxbury 976 of, $398, $774 of, $194 of, and $1,078, $765, respectively, showed a consistent 2.2% to 2.6% one-year price growth. Norwell's $1,273, with a $53,660 one-year jump, was the outlier in acceleration, but not in direction. Pembroke and West Bridgewater supported the broader thrust with $648,314 and $566,266 typical values, each up around 2.8 to 3.4% year-over-year. Such incremental increases, repeated across dozens of towns, build to the statewide October picture. A 2.3% year-over-year rise in the median single-family price to $660,000, and a 2.8% rise in the median condo price to $549,900. On Cape and the Islands, high baselines like Chilmark's $2,000, $320, $845 still produced a $17,690 one-year gain, up 0.8%. In the Boston core and beyond, Winchester at $1,514,768 and Newton at $1,490 an hour signaled how close-in locations held prices with smaller year-over-year rises. Winchester up 1.3%, Newton up 2.4%. Needham's $1,513,544 and Wellesley's $1,969,343 showed that even a modest 1.5% to 2.2% one-year climb at these price points adds tens of thousands of dollars, $22,323 in Needham, $42,206 in Wellesley in a single year. Over 5 years, those towns added $486,630 and $640,686, respectively, the compounding effect of sustained demand. If you were hunting a condo in September in Boston's orbit, the backdrop included that 5.1% year-over-year inventory increase versus September 2024 and closed sales up 6.4%. If you were shopping for a house, the statewide context included a 4.2% year-over-year decline in single-family inventory that same month and a 4.8% jump in closed sales. By October, single-family closings reached 3,921, up 5.6% from October the year before. Layer in August's 1.3% rise in new single-family listings and 2.9% rise in new condo listings, and you see why the guidance to be prepared and ready wasn't just rhetoric. The numbers framed every showing and every offer. And, at the margin, small builders and niche firms found ways to add slices of supply. A luxury ADU company based in Concord built a business on purpose-built accessory dwelling units, handling concept through permitting and turnkey delivery across Metro West Boston. The firm completed the only subdivision in Concord developed by a woman-owned company, and one of its homes topped the City Magazine's most viewed list in 2023. Projects like those won't show up in statewide inventory stats as a flood, but they alter family decisions aging in place, rental flexibility, home offices, and give buyers and sellers more options in markets where a 7.5% bump in new single-family listings in September felt meaningful. The relative quiet of the national baseline, $364,891, as the typical U.S. home value in September 2025 flat year-over-year set the stage for Massachusetts to stand out on its own terms. While rising mortgage rates have slowed growth nationally and even pushed prices down in some places, towns like Norwell and Egremont posted 5.5% to nearly 7% one-year increases. Others maintained smaller but steady rises, Westwood at 2.0%, Andover at 2.4%, Scituate at 2.2%. The range of outcomes from a 1.3% rise in Winchester to an 8.5% rise in Adams tracked the inequity of inventory and the specificity of demand. Condos offered entry points in some pockets while challenging buyers in others. In August, condos posted a 3.1% year-over-year price dip to $540,000, only to see the median rise to $525,000 in September and $549,000 in October. Inventory rose 0.9% in August and 5.1% in September, while closed sales slid 0.5% in August and rose 6.4% in September before October's 1.1% dip in closings. It's a pattern of ebb and flow that rewards patience and strict criteria-building preference lists, understanding HOA fees, and measuring value in neighborhoods where single-family scarcity has pushed some households into larger condos. Sellers faced their own calculus. In a month like August, when new single-family listings rose only 1.3% and inventory fell 3.3%, pricing too aggressively risked sitting through a long weekend and losing momentum. In September, with new listings rising 7.5% for single-family and 13.3% for condos, competition among sellers increased, but so did buyer choices, a dynamic that punished overreach and rewarded balance. By October, single-family prices were up 2.3% year-over-year, not an invitation to chase the sky, but a signal to peg your list price to recent comps that got to the closing table. The 5-year ARCs offer a second backbone for strategy. Scituate up $337,741 across 5 years, Newbury up $332,665, Concord up $510,696, Dover up $554,165. These cumulatives illustrate why long-term owners can price confidently, but they also remind buyers that a fair number today can be a hedge against more costly numbers by 22.7 or 22.8, especially in towns where inventory has kept falling year over year. Even in towns with more moderate baselines, the math holds together. Sutton's $627,201, up $215,617 over 5 years. Grafton's $650,841, up $197,506. In the same period, Berlin's $655,085, up $198,666. The Worcester corridor doesn't need a $2 million listing to illustrate strength. Its steady 3.0% to 3.4% one-year gains ride alongside a nearly 50% 5-year swell. In the Springfield Metro, East Hampton, and Longmeadow show how a $422,674 or $522.62 typical value can still climb 4.1% to 4.6% year over year and more than 40% in 5 years. For buyers, the message is consistent. Understand the month's inventory trend for your target segment and town. A single-family search in September 2027 happened against a 4.2% statewide inventory decline versus the prior September, a condo search against a 5.1% inventory increase. For sellers, the instruction followed from the data, price in the Goldilocks band, especially when new listings rise, as they did by 7.5% for single-family and 13.3% for condos in September. In both cases, the October finish, 3,921 single-family closings, up 5.6% year-over-year, showed how quickly the market rewards alignment. Outlook, grounded in what the numbers already show. The base case is a steady finish to 2025, with modest year-over-year price gains and active closings where new listings continue to appear. In the single-family segment, the watch item is inventory. It fell 3.3% in August and 4.2% in September year-over-year. If that trend persists into November and December, expect pressure to keep the median near or above October's $660,000. A reversal, even a small one, could ease bid intensity and widen inspection windows. In condos, the watch item is buyer momentum. August's year-over-year median of $540,000, down 3.1%, gave way to $525,000 in September and $549,900 in October, with a 2.8% year-over-year rise. Keep an eye on whether the October cooling in closed sales, down 1.1%, becomes a pattern or a blip. A third lens to monitor is the distribution across towns. If standout risers like Norwell, Egremont, and Wenham keep outpacing larger suburbs, the map will remain patchwork advantageous for buyers willing to shift their search 3 or 4 zip codes over. The risks are visible. If single-family inventory continues to fall faster than new listings rise down 4.2% year-over-year in September, even as new single-family listings rose 7.5%, bidding pressure could intensify in prized school districts and waterfront corridors. If mortgage rates remain a national break already slowing growth enough to leave the U.S., typical home value flat at $364, $891, in September some buyers may pause, and towns with 1 to 2% year-over-year gains may see longer days on market. The upside is equally simple. If listing growth holds through late fall mirroring September's 13.3% increase for new condo listings and 7.5% for new single-family listings closings can stay active, as they did with a 4.8 to 6.4% September jump and a 5.6% October rise in single-family closings. And if small-scale additions, like luxury ADUs in Metro West or modest subdivisions in historic towns, keep filtering into the market, the pressure points can soften at the edges. The lesson of Massachusetts this fall is practical. Price to the present, not the past. Track the month's inventory, percent change for your segment. Measure your town's 1-year and 5-year curve, whether it's a $1,562 house in Lexington, up 1.7% in the year and 45.2% in 5, or a $263,580 house in Adams, up 8.5% in the year and 66.9% in 5. And remember the scale of steadiness. October's $660,000 statewide single-family median was only 2.3% above the prior October, but the town-level lattice was built on $10,000, $20,000, and $50,000 year-over-year gains. Those are real numbers that make real decisions. If you want more number-driven breakdowns of where Massachusetts housing is actually moving, stay with us.